The only people who lose money in real estate are those that are forced to sell their properties, because real estate eventually over time will go up in value. Here in the Bay Area, we're really fortunate. Over the last 40 years, we've had 5 corrections. The average correction is only 10%. I really help people understand the fact that if we look back at history, I'll ask them right up front, how long do you plan on living in this home? If the answer is more than 5 years, there's an 80% chance that there's no way that I'll get hurt.
But this is my house, Mommy. So what I asked Mr. Kringle for, it is, I know it is.
Welcome to The Pursuit of Home, coming to you from New York City. This is real people buying real estate and their unique journey to get there. We share the tips, tricks, and frameworks to help you navigate the bumps in the road that you won't see on reality TV or social media, and which no one has talked about until now. These are the emotional, psychological, ethical, and even spiritual challenges you're more than likely to encounter yourself. Learn from experts who've been there and hang out with me, Scott Harris, your host, who's helped thousands of people buy homes in Manhattan over the last 2 decades. Welcome to The Pursuit of Home, where we explore what it really means to find and create a place to call home. Today, we're diving into the intersection of real estate, wealth building, and the emotional side of buying and selling a home. I'm joined today with and by Brett Jennings, founder and CEO of Real Estate Experts, a Silicon Valley luxury home marketing expert. And Brett is one of the top professionals, not only in the Bay Area, but across the entire country. Brett's team has been recognized for its impressive success in helping clients sell their homes for top dollar, which makes sense because he's in Silicon Valley. He's also leveraged his expertise in negotiation and done a lot of innovative marketing. He's a sought-after advisor to buyers, helping them make smart, strategic decisions to build long-term wealth through real estate as well. In this episode, we're going to talk about how Brett's unique approach to real estate negotiation has helped countless clients succeed. We'll also discuss the emotional side of real estate home buying and what strategies today you can implement to set yourself up for success. Brett, welcome to the show.
Great to be here, Scott. Thanks for inviting me.
Brett, you've achieved incredible success in the real estate world. You've led one of the top teams in the Bay Area. But before all of this, what was your aha moment when you realized that real estate was more than just your career? It was your path to creating lasting impact, wealth for yourself, and for your clients.
That's a great question. And it's interesting because real estate professionals, real estate agents come from a variety of different backgrounds and fields. And Scott, for many, I would say for a lot of real estate professionals, it's kind of been a plan B or plan C, if you will. You know, real estate, there's very few people who go and get a degree in real estate and come out of college to be an agent. Many of them, you know, try their hand at different careers and fall into real estate, if you will. It was somewhat like that for me. I did come out of college and I went into financial services actually in my first career. And I built a business helping basically business owners and real estate investors, mostly real estate investors, forming corporations and limited liability companies to help them protect their assets. And I built that company for 5 years. This is like my late 20s, early 30s. And I saw a pattern and it was very clear. My best clients owned lots of real estate and the profile was a guy or gal in their mid 50s. They were not a doctor. They were not a lawyer. They were working class people who were smart with their real estate decisions over time. And typical profile was a guy or gal in their mid 50s, owned maybe 7, 8, 9 rental properties. Most of them were, you know, well to being paid off. They had multiple 5-figure monthly income, 7-figure or multiple 7-figure net worth. And they had, you know, financial security and great lifestyle. And like I said, these weren't doctors or lawyers. I remember talking to one gentleman, he was a UPS driver. And I said, well, what was your secret? He said, well, I went to a real estate seminar in 1979 and the advice was buy one house a year and never sell your properties. I was like, oh, okay. That's a pretty simple formula. And so seeing that pattern over and over, I was like inspired. I said, okay, well, I think I want to focus on real estate. And I also knew that I said, I want to focus on real estate. But I also knew at the time I didn't have sufficient capital to come out and be a real estate investor myself right out of the gate. So I thought, maybe I'll become an agent. It will give me the experience to learn and understand the market. And then I can start making money and saving money and get into the game of investing. What better way than to have my eyes, and learn and understand this field. So I started out my first year in real estate because I'd come from kind of this investor mindset. that was my strategy for acquiring clients. I hosted my first year in the business, which was a tough year, by the way. I got my license 3 days before Bear Stearns collapsed in 2008.
Right. People who don't remember, that was really like when that was the big red signal that something was very, very wrong in the economy back in 2008.
Yeah, 2008. And so because I had this investor background, when I started my first year, my chosen audience was investors or people who wanted to be investors. So I started a group called meetup.com. And I went to that website and put out there that, if you wanted to learn about local real estate investing, come join me in a conversation once a month. And I'd get, I put a room together and typically have a guest speaker that would talk about property management or maybe investing out of state, because it was quite expensive to invest in California. And I'd get 20 to 30, mostly tech people showing up to those events. And I'd sit down with them. I'd say, hey, I'm happy to meet with you after these meetings to talk about what your plan is and see if I could help you. And the typical profile was someone who was working in tech. They were renting an apartment, hadn't yet purchased a home, and they wanted to get on the wealth building journey through investing. And the conversation typically would quickly pivot to, well, hey, your first priority really should be your primary residence because of the tax advantages for that. Also, because if you go out and buy an investment property and sign for a mortgage, that will probably reduce your purchasing power when you go to buy a home. So it's better to buy your primary residence first. And I ended up helping a lot of them, not just, I said, let's do this. Let's look at the home as an investment. And if we do that, instead of purchasing maybe a condo, which you can afford, or a small house, if you're really thinking about maximizing the investment potential, let's consider a duplex, because maybe you can live in one side and rent out the other. And FHA financing, which only requires 3.5% down, actually at the time was allowing, this is way back in 2008, first-time investors to buy a duplex and qualify up to $1 million with only 3.5% down. So I helped a number of people that first year. And even through the market downturn, what I saw was they were able to sustain their property and make their payments because they had somebody living in the other side. And those first handful of clients I helped that first year and that second year, even through the downturn, Scott, I watched those people. I had another family that I helped that year. We didn't buy a duplex. We bought a single family, and their daughter got into an amazing school in Cupertino here, which is one of the top public high schools in the country. 5 years later, the daughter walked on UCLA. She became a UCLA med school student. We helped them sell that home. They downsized because they didn't need the school district anymore. And I think they made $1 million in that transaction. And that's when the light bulb really went off for me, to come back to the answer to your question, where I was like, wow, real estate is truly a vehicle. The right real estate decisions over time can be life-changing for people. This family got their daughter into an amazing school. They didn't have to pay for private school because we selected a property that had great public schools. A property went up in huge amount of value over the time. Unfortunately didn't have to pay for tuition at UCLA because the daughter's grades were so good and the school that she came from was so good, she got a scholarship. And then they had $1 million that they added to their net worth over that 5-year period of time. And those kind of scenarios are what's most exciting, really, about really helping guide people to those kinds of decisions, because it can change, the trajectory of their life and even their family legacy, if you will, just by getting people into the right environment.
That's the thing. People listening here, there's this very rational approach, and then it all gets distracted. People get distracted by excitement or disappointment or fear. So, the follow-up question I have for you, Brett, is how do you help buyers manage all of these emotional highs and lows, still able to make rational decisions that are going to serve their financial and lifestyle goals? Because, sometimes it really is. It's very easy to talk about it right now, but then, it's kind of like the Mike Tyson quote, everybody has a plan until they get punched in the face. And so you have to plan for that. So how do you manage people's highs and lows?
One is understanding that, the only people who lose money in real estate are those that are forced to sell their properties, because real estate eventually over time will go up in value. Here in the Bay Area, we're really fortunate. over the last 40 years, we've had 5 corrections. The average correction is only 10%. I really help people understand the fact that if we look back at history, I'll ask them right up front, how long do you plan on living in this home? If the answer is more than 5 years, there's an 80% chance that there's no way they'll get hurt. And if the answer is 7 to 10 years, then there's like a 99% chance that they're not going to get hurt. Because I have an agent who works on my team, Brad Garofalo, bought, I think it was September 2008, right before the crash. He bought a home in the Willow Glen area of San Jose for $832,000. And I tested our theory with looking at his scenario, because he bought in 2008. And I've always said that Bay Area real estate goes up 50% every 5 years and 100% every 10, in spite of the ups and downs of the market. And when we looked at his house, he paid $832,000 in 2008. 2012, it had gone down to 520. It lost like almost 40% of his value. And, he was crying in his milk at the time, but he stuck it out and he hung in there, and he still lives in the house today. But we looked at the 10-year mark in 2018, that property was worth exactly $1.64 million, exactly 100% appreciation, even through the 2008 crash. So it really is, a long-term play. So I'll remind clients of that. And then the second thing that they have to think about is when they do get in the game, if you are in a competitive market, sometimes it is a little unnerving when they have to enter a multiple offer situation and that price is going up 10,000, 20,000, 50,000. I'll remind them that, how long do you plan on being in this property? Because, to pay a premium of 30 or 40, $50,000 to get into the market is you're not overpaying for that property. In the Bay Area, we can see when we do have these price surges in these multiple offer scenarios or situations, prices can go up 2 to 3% per month for, if we're entering a hot market. So that in premium they got to pay to get in the market gets washed out in 2 or 3 months. And we share and show people that. But ultimately, we live in the Garden of Eden of real estate in Northern California. And we're super fortunate to live here and, help people invest here. And that I think is just being able to remind them that over time, time heals all wounds, but also time is completely on your side with real estate. So by showing people the data and helping remind them of that, I think takes away some of the fear. Also looking at, besides the economics, why are they making this decision? What's most important to them about the decision they're about to make from an emotional perspective. And if the emotions line up and the reason why they're buying lines up with the economics of it, usually, provides a scenario where they can see the path forward. But a lot of times, a good real estate agent or a real estate professional is there to protect the client from themselves, because usually the irrational decision isn't making the leap to spend the extra $20,000 or $30,000 to get into the game. It's wanting to not make that offer when prices are going up. That's the irrational decision that the home buyer wants to make. And we really have to kind of remind them, hold their hand and say, you're going to be okay.
I just want to zoom in for 1 second. That is a point that no one has yet made on the podcast. That sometimes, I just want to make sure people heard it, that sometimes the irrational decision is not to pay too much, but to jump out. So holding space for buyers so that they can maybe calm down enough to see that they're making an irrational decision to run away, so to speak. That is an expert move. So thanks for sharing that, Brett. I want to jump into Zillow. You have this team, you're an expert, you're among the top 1% of the 1%. You're right in the very elite. Your company is among the very elite of real estate agents out there. And yet a lot of people are starting their search on Zillow. You've been on their advisory board since 2018, I believe. What works about Zillow for home buyers? And when do you think it's time for them to engage the real estate agent?
That's a great question. Yeah, really what Zillow did well was they provided, they came out and when I first started in 2008, I think they started in 2007. And their first, real wave of innovation was they were providing the home value estimates, the Zestimate, and then they started providing, access. People could just go and search for properties that were for sale on Zillow. And really what they did is, prior to that, you had to go to a real estate agent or broker to get access to properties. So they provided free access to all the market information. And that was prior to that period of time. That was a big part of the value that real estate agents brought to the equation, was just being the information provider. What they did in that move is really forced us as agents to really become experts, because our value then, if you could just go to a website and get all the information, our value wasn't bringing the information. Our value was then to interpret the information. And really that is the true value of what a good real estate agent or real estate expert brings to the table, is they help bring a nuanced understanding to you about the market in alignment with what your goals are, right? So we have to balance what your goals are and what's happening with the market, and bring those two things together to help provide good fiduciary advice, for home buyers or home sellers. But Zillow did change the game and elevated the industry from that perspective. The other thing they did is they brought transparency through their review system. So now basically consumers can see, for the most part, consumers don't know the difference between real estate agents. A realtor is a realtor is a realtor. And I would say the average home buyer or seller's mind, until they can start to understand, well, how much business has this person done? What kind of reviews do they have out there? And that we were intentional in the early stages of that, because we felt that would be a good space or place for us to differentiate and make visible the difference that we could make for people, as opposed to just an average agent out there. So a home buyer is looking for a good agent. Certainly, check the Google reviews, check the Zillow reviews, and you'll find that out. Now, what Zillow ended up doing later on for the teams and groups that partnered with them was they started doing internal customer or client surveys, not reviews. Surveys are different than reviews. Reviews are, you can always ask your people who are happy, please leave me a review. Agents would never ask somebody who's not happy with it. But they started doing customer experience reviews, what I thought was really great, because the reviews bring some transparency, but the surveys really enabled us to increase our level of performance and skill, because it wasn't asking somebody who you did good for feedback. It was asking everyone for feedback, and that's the best way to get better. So they've changed the industry in I think a positive way.
I want to zoom or talk a little bit more about technology. It certainly made all the difference in terms of researching homes, like you said, finding, I think people should absolutely research agents before they hire them, negotiating. How does it change in your market in Silicon Valley when so many of your clients are in technology? Does it help them? Does it hurt them? Does it make any difference at all? Do they behave? Do your non-tech clients act any differently in terms of how they engage with you on tech, the technology of real estate, or are humans humans?
I think for our really smart, educated consumers, it might be a disadvantage, because there is a certain profile of client that we've come across that is so informed that they quite literally think they know it all, and are less inclined to take our advice and really kind of want to make decisions on their own. And I just know from experience that, if we have clients that trust us and follow our advice, they get the best outcomes. And when we have people who are well informed and say, hey, I know better than you, oftentimes it hasn't worked out as well for them. And so it's always, if you do your best to find the best professional or expert to help you with something, it's always good to take their advice. I wouldn't pay my attorney $500 an hour and then go against what his recommendations were, because that's kind of defeats the purpose. So that's a good question. And that we do see that happen sometimes.
Okay. I want to get into negotiation, Brett. You're a trained expert. You've got a degree of some kind from Harvard in negotiation, your skills, you've helped people negotiate huge millions and millions of dollars of sales. How do you apply these skills to your buyer side deals? And when buyers are coming to the table with so much tech world wealth, startup world wealth, how do they act differently? How does it impact your market? And maybe you can share a story where your negotiation made a real difference for a buyer.
The Harvard Law School does an institute on negotiation, and I went through a summer program there to get a certificate in negotiation. That curriculum has been distilled down into real estate. It really is a collaborative versus competitive negotiation style. A competitive negotiation style, just to set some context for the two, if we had an orange, for example, Scott, on the table, and we cut it in half, a competitive negotiator is going to eyeball for the bigger half and take the bigger half. A collaborative negotiator, we put the orange on the table, might ask the question and say, hey, Scott, well, what do you want out of the orange? Because maybe you're a chef and you want the zest for a recipe and I want orange juice. And in that case, like, we can both get all of what we want. And so collaborative negotiation would say, let's start our conversation from the perspective of what's really most important to you, because oftentimes they're not the same. And then really kind of figuring out what's there. The other principle is that the person with the most information in a negotiation oftentimes has the most leverage. So having a deep understanding of the market and what's happening is super helpful. One of the things that we've used, so the party with the most information in a negotiation is typically going to have the upper hand. The other thing that we want to kind of acknowledge is that there's more than just a seller in a negotiation. There's the seller's agent. And in our competitive multiple offer environment, it's appealing to not just the seller with raw numbers, that's what we call quantitative data, but there's also qualitative and an emotional component to the transaction as well. To give you an example of how we have helped our clients succeed in multiple offer situations is one, leveraging the agent relationships. One particular strategy we've employed is by submitting an offer. Two things. One is if we can appeal to the emotions of the seller, that typically can work in our favor. So we typically, even though this has been frowned upon at times, we still submit an offer, a letter with our offer to the seller's agent, telling a little bit of background about the family who's purchasing the home, why they love the home, and why it would be a great fit. In addition, typically what I sometimes do is I'll shoot a video and I am addressing the seller in the video, because in the old days, we used to actually present offers. You would do an offer presentation, and you, as the buyer's agent, would meet with the seller and the seller's agent and actually present that offer and tell the story first person directly to the seller. That typically isn't done anymore, but we can actually kind of emulate that process by recording a video. And in that video, I will talk up the listing agent. For example, if you were the listing agent and I was recording a video, I would say, dear Mr. and Mrs. Seller, I just first off want to say you obviously did the right thing by selecting Scott as your agent, because Scott has been phenomenal throughout this whole process. He's been, exemplary in how he's shown up and provided the information and negotiated with me. And so first off, I just want to acknowledge, you did a great job in selecting Scott. And I just wanted to personally take the time to tell you a little bit about our buyer and what they really appreciate about your home. And so making an emotional appeal to you as the agent and to them as the seller. So what I know for sure is if I've talked that agent up in that video, they are for sure going to play that video for your seller.
Isn't that interesting?
Yeah, that has given me the opportunity and the leg up to make that direct person-to-person connection with the seller. And that is something that has given us kind of first right of refusal. The other thing that we can sometimes do is that about 1/3 of the offers in the market are all cash. And typically a cash offer for a home that's been on the market for a while, the data suggests that you can purchase that property for 1% to 3% below what the asking price is if it's been on the market a while. If it hasn't been on the market for a while, and there are many, if you're working with an agent, ask them about what kind of options they have to help you present an all cash offer, because there are many mortgage lenders that have kind of a same as cash option. But we will present a cash offer option for our offer when we present it. And what we have found is that can often be a difference maker, because if we can present a cash offer that closes in 14 days, and most of our competition is at 30 days on the close of escrow, we have had it happen where we were 26 offers, we were 6th in line with price, but we got the call back from the listing agent saying, hey, our clients really like your offer. You weren't the highest, but they like your terms, all cash and a quick close. And they were wondering if you can match the top offer, you could have the house. And so by being strategic and really giving the sellers options and also creating those emotional appeals are some nuanced things that you or your agent can do to kind of get yourself that first right of refusal or first position, which is super important in a competitive market. So those are just a few things in negotiation that we focus on.
This is totally gold, Brett. I mean, if you're out there listening, you're like, oh my God, my agent should totally record a video and send it to the seller. I mean, what an incredible idea, and something that gives you a chance to both, as an agent, solidify your relationship with that other agent, even if you maybe don't love them all the time, really talk them up and say they've done a good job, and then hype them and give your buyers the best chance of success. I love it. Well, Brett, real estate is a roller coaster. I'm sure you've lost, you're talking about winning bidding wars. I'm sure you've lost just as many or even more. If you could leave home buyers with one piece of advice to help them stay grounded and confident throughout the process, what would it be?
Trust the advice of your agent. Let them guide you. You've hired them to be your counselor and your advisor and your guide and your fiduciary. So trust the advice of your agent. And, if you feel that when you go to understand that it's going to be an emotional process, and it's probably going to feel like the scariest day of your life when you sign an offer to buy a home for $1, $2, $3, $4 million, whatever it may be. It's the largest, financial transaction of your life. But if you're choosing to do that and you're choosing to be in that home for 5 to 7 years or more, that you're going to be okay. You're probably going to be better than okay if you're buying a home in the Bay Area or California. And enjoy the journey, because it's a great one.
Ladies and gentlemen, Brett from Real Estate Experts. Brett Jennings, thank you so much for being here. That's it for this episode of The Pursuit of Home. I hope today's conversation gave you insight, clarity, and maybe even a new way to think about your own home search. If you enjoyed the episode, please take a moment to follow, rate, and review the show. It really helps us reach more people on their own journey to home ownership. The Pursuit of Home is proudly produced by Fame, the B2B podcast production agency. Find The Pursuit of Home on Spotify, Apple Podcasts, and everywhere else you listen to podcasts. And if you want to connect, you can find me anytime on social media or at Magnetic. Until next time, happy home hunting.